All right, welcome to the weekly meeting, August 31st, last week of August. Great trade opportunities coming up. I want to use this weekly meeting as an opportunity to discuss the three elements of a good trade setup, or call it the anatomy of a good trade setup, however you want to call it. All right. There are three things that I need to see on every trade setup for me, right? I need to see an order block, I need to see an imbalance, and I need to see a break of structure. And it doesn't matter what time frame we're talking about, these elements need to be present, right? So in this case, we're going to look at this down move. We have a 4-hour bearish order block. We have an imbalance, right? The wick of this candle doesn't connect with the wick of this candle. That leaves this area as an imbalance. And price pushed down to break structure right here. This is where it broke the structure. And that created a good trade setup. So now, understanding that this area is a good area for a trade setup, I would have just fibbed this candle. All right, wick to wick. I would mark up my golden zone. And I would mark my 78% for my optimal trade entry. And I would delete my Fibonacci. And I sit on my hands, right? Until the trade comes back to tap me in. Now, naturally, y'all know I like to see the next candle come up, tap you into the trade, and to sell it. Okay. But in this case, price never tapped us in. It pushed all the way down, right? So now I suspect that this price is going to come up and tap us into this sell trade to sell from here, right? Even if it doesn't sell, we're going to get a reaction to sell in this area. So that is why I chose to put my TP at this 78. Does everybody understand that? Yay, nay?
Yes.
Yes.
Yeah.
Yes.
So to me, this trade setup is all set in stone. If this trade setup is if it pays out, y'all see the pip count on this bad boy? That's 841. 841 pips. What's up, G-Child? G-Child. You raised your hand, bro. Was that a mistake? Okay, so that is why I'm targeting this area. I released that video time and price this morning. So hopefully everybody understood how all this kind of set up. And it just so happened to be the end of the month when price needs to run up. If you remember the trade we took in January, it was the same thing, right? That setup in January that we got into January 2nd, price immediately pushed up, right? It crossed over our moving averages. In this case, price is just now crossing over our moving average on the daily, right? Same thing. So it's a double bottom. This wick right here is a liquidity grab. Now, once we got the liquidity grab, we got the chalk, the push up and the pullback to our 78%, which we should have gotten our entry. And now we on our horses, we going up. This trade setup is a great trade setup, right? And all we have to do is enter the trade and be patient, all right? Which brings me to my next point, right? We got the three things, and I even gave you a bonus, which is that chalk. I'll make another video on this later, but the chalk, the change of character, is what you want to see. That's what I want to see in my area of interest. The other day, right, or maybe it was the other week, I remember us talking about this trade, and I'm like, hey man, Ray Charles can see that this is going to buy. and then price immediately sells, right? It didn't sell to break this low, right? It just came back down to make a double bottom. And it wasn't that I was wrong. And this is why I believe that every professional trader should hedge and not use stop losses, because price never left this area, right? It never violated the low. It never broke the low of this trade. The trade was always going to be valid, but it couldn't move up here until the certain time. And this is what ICT talks about when he talks about time and price. You know, did this sell down here because sellers were battling the buyers and sellers pushed the price down? Hell no, that's not what happened. The computer program understood that it could not allow price to go up until that new candle came out, right? So we have a 2-month candle, right? If you notice where this 2-month candle closed, it bounced off the moving average, right? So are sellers pushing this price to these moving averages? Or is a computer program, keeping price bouncing from these moving averages? I ain't gonna argue with nobody. I believe in the computer. Everything else is ran by computers. So is this, in my opinion. I don't think it's buyers and sellers. And if you think that, then that's cool. Whatever floats your vote. But price didn't move until the appointed time. Now, y'all know, and especially here lately, I kind of been hammering on this. At the end of the month, it's going to be a bag of money waiting for us. At the end of the month, it is going to be a bag of money waiting for us. It doesn't matter what we're trading. Last month, you could have traded anything. This month, you got UJ. We got a 2-month candle. So UJ traveled from wick to wick, 2,000 pips. If UJ pulls back halfway, that's 1,000 pip gain, guy. You can't make this up. You can't make it up. Let's look at NJ, another pair that traveled a bunch of pips. All right, what's the difference between UJ and NJ? NJ has retraced a lot more than UJ. NJ traveled 1,500 pips, but it's already pulled back to the zone. So I'm not interested in that trade. As the trader, I choose the setup that I have the advantage over. And I don't feel like my advantage over NJ is a significant advantage. My advantage over UJ is very significant because we haven't pulled back yet. So I want to take the trade that provides me the best outcome, right? Let's look at another trade, or a couple of different trades that I'm in. EuroCAD, right? We have a candle that pushes up. It's basically a bullish order block that wicks out, right? It wicked out. This wick took out some highs. So y'all know me, I believe that the market is going to run in the opposite direction. But we're at the end of the month. I expect price to push up and then keep selling, right? But when I look at this trade setup, this doesn't give me more of an advantage than that UJ trade. Even when I go down to the 1 month, right? I can see that there's a doji candle. I expect price to buy up first and then sell down. To me, this trade isn't as attractive as the UJ trade. Now, I have a position in that trade. Me and Bebe have a position in that trade. So I will trade it, but I'm not going to focus on it, right? Let's look at EN. If you know, like I know, EN is telling you it's selling, right? Bearish order block, push down, broke these lows, pull back. Where did it pull back? 78%. If I fib that down, moving back up, we're at the 78. Now, the market pushes down, then it comes up and wicks the high. So if you have been short in here, it come up and took you out the trade. Why did it take you out the trade, Sway? It took you out the trade because they ain't taking everybody along for the sell. Andrew, what up, baby boy? I'm glad you showed up, bro. But why did they wick you out the trade? They did it on purpose, bro, because they ain't taking everybody. Everybody can't go along on this ride. This is going to collapse. That wick tells you the story. So, but this is another opportunity that you'll have to go short. But when I look at the 2-month candle, this did not provide me with the best opportunity to trade it. So I'm going to chill. I'm going to put this on the back burner. I'll trade this later. At the beginning of the month, I want the big joker guarantee. I want the fat chick at the end of the night. I don't want to chase the supermodel. She got options. This trade got options. It can go either way. That other trade, it's the fat chick. She ain't got no options. This is the end of the night. She got to choose me. You know, this Euro USD trade, it went up. It's going to sell back down before it goes up. It got options too. So this is another decent setup, but it just doesn't offer the same pip count that UJ trade does. So if I fib this trade, right, or not fib it, if I measure that candle, it traveled 500 pips in 2 months. If it pulls back, it gives you 250 if it was all the way filled up, but it's not all the way filled up. So this pullback, it'll give me my 100 pips, but I don't want it, bro. Like it's not going to give me 800 pips. It's not even close. So I'm not interested. So you just do this when you go through all your pairs and you come up with trade ideas that work for you. And none of these trade ideas, if I'm looking on this 2-month chart, none of these trade ideas are as attractive as the UJ idea, right? So I'm choosing UJ. If UJ doesn't give me what I need, then maybe I will use EJ. Let me see if EJ was one of them. Yeah, EJ is halfway decent. And if not, then I'm cool with GC. I'm cool with which one of them chef pairs? Was it USD chef? Okay, USD chef. I would be cool with this buy-up, right? So I have 2 or 3 pair that I'm comfortable with taking my monthly trader. And to me, guys, this sets the standard for the rest of the month. If I win this trade, then my month is easy, right? Because I might win a big chunk of money in the first 5 to 10 days of the month. Now there's no pressure, or there's less pressure for me to perform the next few weeks, right? Even though we can catch trades, and we do catch trades every week, the pressure is low. Now you don't feel like you got to force the trade. You got to jump in, right? If it doesn't give you exactly what you want, you sit on your hands. This is the best way, in my opinion, to operate as a trader when we don't feel that we're forced into action. We can just wait on the trade setup to present itself, and we can take the best trade, right? On the August 5th, I pointed out several trades that wicked their highs or lows, and that we're going to take they're going to take route to the other side of the market, right? GAEA, EN, EURCHF, all those trades wicked, and they will go to the opposite side of the market. Some of them wicked out on the buy side, so they will go to the sell side. Other ones wicked out on the sell side and will go to the buy side. EURCHF was one of those trades that wicked the low and will head to the buy side. There was an area that we identified in that trade, and that we were looking at price to kind of turn around. And, you know, it just so happened, if you look at this chart, right, in my opinion, this is EURCAD. Let's talk about EURCHF. If you look at the EURCHF chart, in my opinion, it gives everything that I wanted to see, right? I identified this area as an area that price should come back to before it turns to buy up. And the reason why I identified that area is because when this price got down here and wicked out, and this wick took the liquidity from a swing low over here, right? All I did was fib this up move. This pullback was my area of interest. Well, what happened in my area of interest? It gave me a daily candle. The daily candle wicked out. The next candle, the next daily candle was an inside bar, right? An inside bar in my area of interest 99% of the time means the price is turning around, right? And if you don't believe in that concept, if you don't believe it, just drop down in your time frame, right? If I look at the 12-hour time frame, I can clearly see it came to my area of interest. It gave me a bullish order block, and price started buying up out of here. So I entered in this trade too. But everything lined up. My area of interest, price stopped and turned. I got the bullish order block. Price pulls down. Once it gives you the bullish order block, your entry is right here. Price takes off. So if you have all of those elements, right? And when you're trading with order blocks, let me see the 6-hour chart. Once you got this 6-hour order block, right, that pushed up past this area, I expected a pullback because this is your chalk, right? Your push up at your area of interest and your pullback has to happen, right? But this gave you all the elements. It gave you an order block, it gave you a break of structure, and it gave you an imbalance. Now all you had to do is wait for price to trade back into your imbalance to take the long stop loss beneath this candle, and price started pushing up. Now, because this chalk move needs to happen on the higher time frames, you can expect for price to pull back, right? You can expect for price to pull back to this area. So maybe price comes back down to this area, maybe price comes to your 62, but it's going to come to one of these two areas on Monday or Sunday. You know, when the market opens, it's going to push down here, and then you should get your turn and burn. So if you missed this trade setup and you're interested in it, right? This trade setup I have going way up. I'm not even going to tell you the pip count, but you know, I got it going up over 1,000 pips. And the reason I have it going up over 1,000 pips is because of the concept of running the liquidity out of the market, right? What time frame did we run the liquidity out of this market? That would be the 2-week time frame, right? We have a swing low on the 2-week time frame, and price still, for whatever reason, thought it was cool to run the liquidity out, right? If you're running the liquidity out of a 2-week time frame, I'm interested because if you understand how to trade this concept, once the swing low is set and the liquidity is ran, price will run to the other side. This is the other side, guy. This was the swing that pushed down to this area, right? Price pushed from here to here, pulled back, and it pushed from here to here, right? So I expect for price to run back to this level. Look how many pips that is, dude. That's crazy. That's crazy work. Now, maybe it takes 6 months. Maybe it takes 8 months. This might give you an opportunity to perfect your trading craft. You know what I'm saying? To buy, you know, whenever you pull back to add another position. So if you believe in the concept, then you can take this trade with me. If you don't believe that it's going way up here, just take it to this high, bro. Like if you take it to this high, I like, you know why I like y'all, man? Because y'all in the group, but y'all don't believe. This is still a 530 pip move, right? From where price is right now. If it buys up to this high, that gives you 530. So even if you don't believe what I'm saying about price coming back up to this high, trade it to this high. This is 530 pips. If it breaks this high, then it's probably going to take out these equal highs right here. So then you can trade it another 500 some pips. Okay. 3 elements of a good trade setup: order block, displacement or imbalance, and break of structure. If you have those three, you have a high probability trade setup, right? If you trade the same concept, like I do, ICT mentorship 2022 model, right? I always tell you slide 3, but slide 8 is crucial. You will find a level of consistency. Now, I'm not saying you're going to win every trade. That's not going to happen. But you're going to win more than you lose, and you will be consistent in trading your trade setups. Even when other people don't agree with your trade setup, they don't have to. The thing that makes a good trade is you have buyers and sellers. If you trade your setup every time, you're going to come out on the right side of the win-loss column, right? Because you're going to win the trades that you're supposed to be in, and your wins are going to provide more than enough pips to cover your losses, right? Do I have any questions? Brett, Bueller. No questions. Hey,
No, I'm good, bro. Appreciate it. I'm following.
cool. Hey, Andrew. My boy Andrew.
Yo, I'm just a little busy, just cooking
Oh,
something.
okay.
Yeah, what's up?
It's all good. So, this is the GA trade, the one that I have selling. Again, this wick those highs also the same day on the 5th. It ended with a 2-month bullish order block, right? So what I think is going to happen is price is going to buy up first and then sell off, right? But maybe because we got the 2-week bullish order block, maybe price would just sell first and buy up. There was an area that me and you discussed, probably up in this area. It was up in this area that we thought that price needed to come, and then price cooked off before it went up there. So in my opinion, there's still reason for price to go up. It needs to run these equal highs right here and then run into this area, in my opinion. I'm sure you'll cover it one day, when you're on your call. You get on the call Thursday, Drew? I think Andrew does the call on Thursday. But if you're trading,
yeah, Thursdays.
Yeah, okay. So maybe this price runs up and runs out these highs, closes this imbalance, or runs into this area before it sells. But there's also a high probability that we'll open up and get another red candle. We'll have a bearish order block and it'll sell first. If it sells first, it'll be interesting because we should fib from the bottom to the top of this green candle and find out where the golden zone is. So if it sells first, it's probably going to go to that golden zone, and then buy back up. So I don't know who's all trading this. I know Andrew trades GA. I don't know who else does, but just understand that there are multiple ways that this can play itself out. I'm still biased for it to sell overall, but it doesn't mean that it can't do like this. This is a mess, and it can't trade back and forth before it eventually comes down here to the zone. So I don't want you guys to think that price isn't going to come back up here, because we don't know what it could buy first, which in my opinion would be great, because that would mean that we're probably going to push down by the end of the next 2-month candle. But if it sells first, that means we're going to push up, and maybe we might close up on the next 2-month candle. But to me, this area needs to be mitigated before we push down. Just my personal 2 cents doesn't mean it has to happen, but just understand it can happen if you're trading this mess. And in my opinion, it's the reason why we should go and choose our trades, right? You want to trade something that you're comfortable with, right? If you're not comfortable with it, right? If you're trading it based off of what Todd is saying, then you're in the wrong trade. You need to have some conviction behind why you're trading that pair, right? I was adamant that I thought that GA was going to sell, but there are other trades that I feel a lot better about, as far as their movement. And I would tell you, if you're not convicted about a trade, then just stay out of it. Just, let the trade take place, watch it, and maybe the next time you see that setup, you'll be more convicted, or you won't trade it again. There is no wrong way to approach the market, and you can't lose money if you don't enter the trade. So I can't really stress that enough. We got 5 months. Is it 5? We got 4 months left. 4 months left in the year. September, October, November, December. 4 months left to close this year out. If you're not where you want to be, the race isn't over. But the requirement is that you have to lock in on whatever it is you're doing. Get off the 5-minute chart. If it ain't worked for you in the last 3 years, it ain't gonna work in the last 4 months, right? You do something different. Stick to a plan. Get with whoever is teaching you and stick with that person. If you're jumping from system to system, that might work for 1 week or a week and a half or 2 weeks, but in the long run, it's not going to do you any justice, because you're not going to be able to recognize whatever your trade setup is, right? The reason that I've found a level of success is because I trade ICT concepts and I trade them on repeat. I don't switch to a different way of trading. Just I trade those concepts. When the losses come, I accept those losses. It's not a big deal, because I'm trading those concepts. When I see a trade setup that I like, I take that trade based on those concepts. And that's all we can do as traders. I can't really stress that enough. That's super important. You guys have any questions? Everybody know what they trading? Does everybody know what they trade? All right, Brett. That's all I got for y'all, man.
You did good, bro.
Yeah,
Thanks
yeah,
a
that was a good
lot.
call, Tommy, man. It was a great call.
Thank you.
I didn't show up on time, but yeah, it was good.
Hey, Andrew, I thought you was gonna show up with your defense mechanism, bro.
No, I'm not defending anything. I just trade what the market gives me.
Hey, I'm with you.
Even if I say, yeah, we're going to sell, like, maybe sell or something, I'm just looking at it like in the long-term perspective. But
Right.
whenever I comes to the market every day, I'm taking trades. If it's buy opportunity, yeah, I'm going to buy. If it's selling opportunity, I'm going to sell.
Exactly. Hey, Gigi, are you upset we didn't talk about gold? I know you gold bandits.
Hey,
Are you upset we didn't talk about gold?
you said, am I upset?
Mm-hmm.
Nah, it's been playing, but I'm not really mad.
Gold is it's gonna sell, right?
Yep, it is. So I'm just waiting, really. So I just haven't been on it. You know what I mean? It's doing the same thing. So
You say you haven't been on it? You haven't been trading it?
no, I mean, it's been playing in that same area, 23, 25 around that area.
Yeah.
And then it's just been, so, I've been kind of like staying off of it. I'm trying to, work on my discipline and stuff. So
I'm proud of you. But you haven't traded no pairs, huh?
what did I trade on Friday? I traded GM on Friday.
Oh, did you?
Yeah.
Well, I'm proud of you, man. I mean, I didn't know you was trading with us little folks.
Sometimes I gotta, for my sanity, I gotta mute y'all because I gotta,
Hey, I ain't mad at you because I muted every chat but the one I'm in. I ain't gonna lie. I muted all them chats.
Yeah.
Because I don't need to know when new office selling or buying. I don't need to hear all that. I love him and I appreciate him. But for me, I look at my my trade setups and I call them like I see them.
Yeah. Yeah. Sometimes it can mess, so I'm still here.
Okay, that's what's up. So this is the gold, for y'all gold traders. I would look to probably bring gold back to this imbalance right here. At the very least, well, that liquidity got taken from that session. So I would definitely look at bringing gold to this
Hey, bro,
2400
can you do a favor? Can you look at US 30 and National 100 for me real quick?
US 30.
And AU after that, because I think we on that sell, right?
Yeah, but AU is hot. Gosh. No, it's gonna sell. Okay, so the same thing for NASDAQ and
When we get your thumb, or you going? Yeah. And you care about the flavors?
I'm muting you, TT. But the same thing for the indices. I would just measure the 2-month candle, and I would get my long range target. All right, I'm gonna move this to my zone. And I'm gonna move this. Ooh. Okay, so this is how I would look to I'm backwards here, but this is how I would look to trade US 30. So we understand the fundamental backdrop is that these indices will be going higher. So what would be great is for price to pull back to this area, right? There's imbalance right here in your golden zone. So it'll be great for price to pull back. There's some triple lows here, equal lows. It'll be great if price sells down. Now, I don't know if you guys have ever or have paid attention when you trade indices at this time of year. Typically speaking, these indices won't really start running until the end of September, right? So the 1st of September, people would typically tell you that the market is going to be choppy. What that sounds like to me is we should expect to sell at some point, and maybe that's this week with NFP. We're probably going to get strong dollar signals, which would tank the indices, right? When these indices sell, maybe you'll sell it down, right? If you have your area marked up, you shouldn't have any problem with selling it down to your area. But the most important thing, in my opinion, is to start looking for buys when the index goes down here. And me personally, even with my huge account, I use the mini when I get into these indices. And my purpose behind that is we can walk into these trades, y'all. We don't have to get the biggest lot size, because let's say we get in at this imbalance and then the price pushes down to this imbalance. If you walk into the trade, if you get a small position, you can add another small position right here. And then if it pushes down further to run these lows, you can add a third position. And it's not blowing your account the further it pushes down, right? Then once it turns and starts buying up, now you can add other positions on the buy up. And the beautiful part about this is once price leaves this area, it probably won't return again this cycle, right? And when I say this cycle, I mean this financial cycle, right? So A financial cycle includes the interest rates and the interest cut cycle. So we all know that in 2022 or January 2023, they started raising interest rates. That created this bad economy, right? But it also got rid of that high inflation. Now they're going to cut rates and your indices will start just going straight up, right? It'll be the old strategy of buy and hold, right? You buy and you hold it. You know, you buy the dip. You buy the dip. That's what they used to say when I first started trading. So we'll be back to that strategy, and we can buy and hold, right? We can do it with crypto. We can do it with indices, and we can do it with gold. We can buy and hold until the Fed starts talking about raising interest rates again. And they never just raise the interest rates. They always give you a heads up. Hey, we're thinking about tightening. And that's when we know to cash out. So this is exactly how I would trade the US 30 if I was in it. I am in a NASDAQ trade. I bought the NASDAQ on that Wednesday before it went up. I was up 2,300 pips or 2,300 points. And of course, I've lost some of those points back, but I never got into NASDAQ to worry about whether I gain or lose those points. It's just a mini. I got into NASDAQ because we went to a low, and I'm not sure, right? We were way down here. So I'm not sure that we will revisit this area. So if it comes all the way back, I don't care. But this is the same sort of trade setup that we have with that US 30, right? This is where price is now. Maybe we come back to this area, but even if we do come back in here, we're going up. So price might fidado, it might mess around in this area before it pushes up. But I would expect, for whatever the case may be, whatever they're playing, I would expect for prices, all the indices, the S&P 500, the NASDAQ, and the US 30 to start pushing up either the middle or latter part of September. When do we have the rate meeting? Did somebody say it was like the 15th? Let me look. This is August.
It's the 18th.
The 18th. Okay, so around the middle of September, that's when the big money, they're gonna start loading up on them indices, and we already know we're getting a rate cut. So we know around that time those indices are gonna start going north. So don't panic if you see it selling the first couple of weeks. It should be expected. It's gonna sell down to get a big boy as an opportunity to get in, and then we going north. That's the reason gold doing that too. Gold gonna pull back. The indices are pulled back. It's just giving everybody, the big people, an opportunity to get into the trade. The people who don't know what they're doing, who've been buying gold at the top, they're about to be in a world of hurt the next week. This is why you can't buy that stuff at the top. That's why I'm proud of you, Gigi, because you resisted the urge to FOMO into that trade at the top. So anybody who's buying gold up here, they're wrong as two boys kissing, right? I'm joking, y'all. I don't care. I don't mean to make those types of jokes. That kind of slip. But if you're buying gold up here at the top, or you're buying anything at the top, you're setting yourself up. Only buy this stuff when it pulls back. Don't FOMO into them trades up there. Only buy it when it pulls back, because it's going to pull back. This is about to drop out the sky. This is like that video that I made. Smart money is holding this price up here. This push down to me was your chart. That push down told you everything you need to know. Price comes up, it establishes these equal highs. We ran that equal high. We ran it out. Then we come right back down and we break this low. That was the swing low. We broke that low. We came back up. We haven't broke that high yet. We just been sitting at that high. So Now that the calendar turned to the next month, we're about to get busy. And it's gonna start cooking down south. Whatever trade you want to catch, y'all, these trades are available to all of us. And as usual, if you don't believe in the concept, I'm gonna make a believer out you, because this is gonna, this happens every month. This move happens every month. We can go back and we can look at all these monthly candles. I mean, that's a lot of pips, man. Any one of us can pay our rent, our mortgage, whatever we need to pay, we can pay off of this monthly move, guys. We just have to anticipate that move and then take advantage of it. And there's no better way for me to do it this month than you, Jay, myself. I love you, Jay. Any questions?